I wonder whether you're thinking about what the banks are doing at the moment. As a borrower, there are some major changes that are happening. So some banks, including the Commonwealth Bank, have already brought this in about a month ago. But from the 31st of October 2021, we are seeing some, like all the banks have to do the change that's been introduced by the Australian Prudential Regulation Authority. It's known as APRA as a short thing. So what are they doing in the background? Now they actually help regulate and they impose things on the banks financially. And they've actually said to the banks, we want to make sure that your borrowers can afford to pay back those loans over a period of time, not just today, but into the future. And we are going to see interest rates at some stage. So APRA have said to the major banks, we want to see at least 3% difference in the buffer or make allowances for rises over that period of time so that you can afford to repay your loans. So to put that into simple layman's terms, if you are able to secure an interest rate at 2%, you think, yay, that's really good. The way the banks are going to assess you though is at 5%, because they're going to add on 3% as a buffer. So they're expecting to have interest rates into the future. So when they're assessing you today, even though you're getting the interest rate at 2%, they're looking at your serviceability of that loan over a longer period of time. So they're assessing you at 5%. So what does that actually mean? If you were able to borrow $1 million, you know, like last month, and your loan goes for 3 months and you haven't found anything and you have to go back to the bank and go through the whole process again to get pre-approval, because of the difference in the buffer that you're going to have to be assessed at, it means that you may only get $950,000 when you get assessed the second time around. It's not the first time the banks have done this, or sorry, the regulator has done this, and banks do this on a regular period of, you know, over time. You know, it happens. You might be saying, why? Well, they just want to slow down the market a little bit. They're a bit worried about their exposure to debt, and they want to make sure that you can repay your loan and there be no problems in the future. So if you hear somebody talking about APRA, if you hear about buffer zone interest rates, etc., hopefully that's helped you to understand that a little bit more. So it's not actually the banks, it's the regulator in the background that's putting the buffer at a higher level. And so if you've got a loan and it's going to run out soon, just be aware of that change and try and buy something soon before your loan, your pre-approval runs out. So with the change in the buffer rate, how is it going to actually impact on people that are looking to sell? So it's not just the buyers, it's also how does it impact on you as a seller? It's going to mean that people can't afford to borrow as much. They can't afford to borrow as much. They can't afford to pay as much. So it can have an effect on how much somebody will pay for your home. So I would anticipate that this will impact you later on in the year, definitely next year, because somebody could get a loan today and still not be assessed at this new buffer rate. But next year, everybody's loans, the pre-approvals will be all over. And it just means that people won't have as much money. So it could mean that property prices are impacted by that, and you may not see the high prices that we're getting today. Hopefully that's helped everybody in understanding what's going on for both the buyers and the sellers.